So number one is Kenyans continue to have a really tough time. We've seen unemployment go up. We're seeing more people having side hustles and starting part-time jobs and gigs to be able to either close the income gap if they're salaried or even have an income if they've lost their jobs. But definitely the other thing that I like to call out just on the same theme is the side hustle is still very much alive. We're seeing over 60% of full-time employed people actually having a side hustle that supports them in their income. Then the second thing is because customers' expenses are exceeding their income, you find a lot of them are actually cutting out, they're reducing their expenses and cutting out what I'd call unnecessary expenses, such as luxury items and so on and so forth. The third thing I'll call out is we're seeing savings remaining fairly stable at about 25% of customers being, consistently saving, which is great, and also speaks to the outlook, where we're seeing a lot of Kenyans saying that they feel optimistic, despite not being able to meet their expenses in the immediate. They feel optimistic. I think it was over 75% saying that they believe the next few months will start to get better and moving into the next year or so. Another thing I'll just call out as a bonus point is we're seeing, I think, 6 out of every 10 Kenyans actually borrowing from more than one lender. So that's been a trend that is continuing, and just speaks to what opportunities are there for different lenders in terms of how you cover the needs of consumers, and also raises questions as an industry on how we start to think about over indebtedness. So those are the bigger themes that I'd like to call out. I think what that means generally for Kenyans, this is not going to be a surprise for any Kenyan, but Kenyans are having a hard time, and we've talked about that a lot. At over 7% inflation rates, then how are people really thinking about how they can better plan their money? And financial literacy was a big theme in the report as well. So people thinking about how do I budget better, how do I cut out unnecessary expenses, how do I save more to be able to cover any emergencies in my life. I think those will continue to be the really big themes and the big things that Kenyans are really concerned about and thinking about. And us as a business, it forms a lot of the product roadmap that we're actively thinking about. So that's on that first part. On your second question with regard to risk-based pricing, Tala has actually been a pioneer in the market in terms of risk-based pricing. This just ensures that the best customers are getting the benefit of actually being lower risk, while passing a bit of that risk base to higher risk customers. And for me, what I found most valuable with risk-based pricing is also each customer has the path to work their way to a lower interest rate with continued continued better repayment behavior. Really worked with the government to define what the DCP regulation would look like. So for us, the biggest thing is, one, we're setting a standard for how the industry should operate, really advancing consumer protection, and we've already seen customers saying that this is one of the big considerations when they're looking for a lender. For the second year running, it's top 5 of the things customers are looking at. So for us, it still remains to be important. Of course, the other hat that personally I play is I sit on the board of DIFSAC, which is a Digital Lenders Association. One of the things that we're really focused on is making sure there's a clear path to licensing for different lenders. We know there's still over 400 applications sitting within central bank, despite 50 being approved. So we are, supporting different lenders on how they can actually also get licensed. Because if you take an extrapolation into markets like Uganda, there's over 2,000 money lenders licensed by UNBRA. Looking at Nigeria, there's, I think, over 100 under the competition authority. So there's still a lot of room for us. And if you extrapolate that versus the pie, the funding deficit in Kenya, some of the formal numbers I've seen is 2.3 trillion. So that's about $19 billion. So the pie is big, is how I like to frame it. And for us, it's making sure that there's a very clear path towards licensure so that everyone is very clear on what compliance will look like.
So Tala has been the guiding light for many digital lenders in the game today. And this initiative of the Money Match that started 4 years ago was also one of those enlightening things that Tala has done for the industry. Why? Because consumer protection is at the heart of it. I was just joking with Wayne, pre regulation, there were some rogue lenders who would make so much noise. I don't know if you remember those days. And I was asking Wayne, where are they now? Right? Why have they not survived? And the reason is simple. They didn't put the customer at the center of it all. And that is what Tala has been able to achieve, and that is what Tala has been able to demonstrate to the rest of the ecosystem.
And you'll realize there's a very big decline comparing to 2022, where we're seeing currently people saying around 54% are saying that they have another source of income, comparing to 80% who had in 2022. So meaning that there is an impact in terms of the income that people are earning, and people are actually sort of struggling in terms of doing that. And this could be as a result of also people actually reducing the effort they're actually doing in terms of building the businesses and actually starting their businesses. We went ahead and looked at which proportion of the business or source of income have other source of income. And we're actually realizing that most of the full-time jobs are the people who have other source of income. An indication that actually the full-time jobs or employers have been pushed to ensure that they have some sort of extra income to manage their cost of living. So this is an indication that the people are actually feeling the pinch of the cost of living, and they're going an extra mile to sort of get what other ways that they can actually generate some sort of income. We looked at the change of income, and what we asked them is, how do you describe your income in the last 6 months? And we are seeing only 26% of people saying that they have experienced a higher source of income, like their income have increased. But majority of the people, around 42%, have experienced low income. And this is a very big jump, around 5 percentage point, claiming that they experience a low source of income. And when we looked and asked them, how would you then describe your financial change, financial situation in the last 6 months, we have seen a majority of them also complaining that it has worsened compared to last year. If you look at the point where we're seeing it on 2022, it was around 4% of the population saying that they had experienced the situation has worsened, comparing to now where we are seeing a majority of 37, which is a very big jump of around 33 percentage points, meaning that the situation sort of worsened, and actually people are feeling the pain. So we did a deep dive to sort of understand, for the people who claim that the income has improved, what is their perception around their financial situation. And the way we are reading that table is what we're calling like column-wise ways. So for example, if you see higher, the people who say their income have increased, which is high, 57%. So that means also that their financial situation is around 57% have improved. But for those group who say the income has increased or higher, we have only seen again 21% have said the situation of the financial situation is 21% has worsened, meaning that even the increase in income does not necessarily mean the financial situation has improved. So they also feel the same way, which you also see the people who say have lower income, the situation is worsened, which is 66%. So generally this picks a picture of the situation in the market, and our customers are actually feeling the pain of the cost of living, and there is some sort of improvement that is required there. Even when you think about digital lending, these are some of the questions that we need to ask ourselves. If people are actually struggling and they have taken a loan, then what do we think about in terms of the repayment? How do we ensure that we also understand the situation and we put some simple empathetic processes when we're actually doing the collection services? So things that our regulations are actually pushing across in terms of like, hey, we need to be empathetic, we need to understand our customers and actually ensure that we do collection is something that is need to be improved and actually be put in place. And also we have seen an increase in or incidence in terms of delayed payments or salaries, lack of capital when you're starting a business, as well as loan burden. So you find that they have taken, because of the cost of living has reduced, their income has reduced and the expenses are high, they're forced to go and borrow to manage those expenses. And for that, they feel that it's a burden in terms of the loans. And also some of them see job losses. We saw that some businesses, the proportion of the businesses have declined over time. And we also seen that people are saying they have lost their jobs, which also correlates to what we saw around the proportion of the full-time jobs. We looked at spending. This is similar to previous year, but we're seeing that people are claiming to spend lower comparing to any other, comparing to the past 6 months. And it's a consistent trend we see since 2022, where it was 18%, and now another 24% people saying that they're actually spending low. And the spend is around utility. If you look at utility, we are seeing a spike of around 6 percentage points, which is on the far side of the left side. But what was actually surprising for me is that despite of everything that they're doing or whatever is happening in the economy, people are consistently saving. This is a figure that we've seen 25%. So meaning the saving culture in Kenya is still there, but people have reduced their personal expenses. These are clothing, holidays, outings, etc. So if you are used to taking somebody to a mall, or you have been using to take them to buy a pizza or etc. So those are some of the things that we are seeing people are actually reducing to sort of manage their spike in terms of the expenses. So as we move towards, even we think about digital lending, I think the question is how do we ensure and how do we reward people as much as they're trying to save and ensure that they're able to save consistently to ensure that they're able to manage their expenses. So for the people who claim their expenses have increased or they're spending more, then we ask them how they're managing the expenses. And what we are seeing them doing is actually sort of cutting down on expenses and sort of reducing the spending on essential items, which we have already skipped. We have talked about. But sadly, there are people who are actually skipping meals to sort of manage their spending. I think for me, it was painful to sort of see that aspect. But also, I think question is, even as we collect and as we proceed lending loans to our customers, question is how do we put this into the picture? And as they probably fall short in terms of repayment, how do we consider all this as we ensure that we have a process that is empathetic when we're doing collection? We are seeing a very a decline in terms of the businesses, and this aligns with people saying that they're closing businesses, meaning that people are also taking less of loan for the businesses. We are seeing a very big spike, which is also trending year to year around school fees. And the question here is then how do we customize loan products for school fees that cater for school fees? We are also seeing as well medical emergency as also increasing, which is around almost like 7 percentage point. And the question is probably there are ways in which we need to partner with different people to ensure that, or insurance to ensure that we're able to provide a medical insurance for the customers so that they can actually have a safety net to protect themselves whenever they get these emergencies. We also see in utility, there's a spike in utility, people taking loans for utility. And this is around almost like 4 percentage points comparing to 2023, as well as increase in rent. So meaning that there is an increase in terms of people spending, taking loans to manage their personal expenses, and an indication which also ties to what we're seeing the cost of living has sort of influenced or impacted people. When we look at the businesses, majority of the people who are actually spending on the businesses, or rather doing business expenses, we also see that from full-time jobs, meaning that people who are employed are trying to look for an extra shilling by spending or starting a small businesses to ensure that they have another source of income. But also, we also realize that people are actually spending as well on utility, and the utility here are basically grocery, electricity, cooking gas. There's a very big jump in terms of the food and grocery, which is around 5 percentage point. So meaning that people are actually taking loans now for not only for economic development purposes, but also to manage their expenses, which again comes back to cost of living. And what we realize when we dig deep into this, the people who are actually spending on the utility are basically the full-time job owners. And this is probably to gap in before their next paycheck to ensure that they're consistently able to manage their household expenses. We could also see some people saying borrowing money. but there is a decline in terms of borrowing money with around around 1 percentage point, but still people will actually do that. The other group of people would say like, hey, working overtime, and some of the people will also trying to say that they are going to be skipping meals, which is also a very sad perspective. So key takeaway for this one is people are actually struggling, and people might end up even struggling when they facing emergencies. And that's the reason why we saw from previous slide. The reason for why they're saving is basically to ensure that they have a safety net for in case of any emergency or unforeseen expenses.